on a 3-year time horizon by our fiscal year 2027, March end 2027, we like to be growing double digits.
Hi Team Value, JJ here. Welcome back. Well, today I'm going to react to more of the recent Tsai interview. He's the chair of Alibaba Group, and he talked about how they're going to get back to substantial growth, what they're doing, and he even puts a timeline on it. So let's get into it. Let's see what he says.
About a year ago, we announced that we were going to reorganize ourselves. The thinking internally, the primary thinking behind that is to ensure that our decision-making can be faster, and then we give autonomy to more the business unit CEOs, rather than having one group CEO having to make 100 decisions a day. That's not possible. So we solved the CEO bandwidth issue by delegating authority to the business units and also to younger people, all right? And then we had some personnel changes. So I'm in my position where I am now because of those personnel changes. The great thing is I work with a CEO who's much younger than I am. He is the day-to-day guy. Eddie Wu is our CEO.
Eddie Wu.
And he has huge credibility within the company because he had been a founder of the business. So we were all in that apartment back in 1999.
So there are a number of co-founders, all of these people, Tsai, Eddie Wu, Jack Ma, and others were all co-founders in the company, if you didn't know. So there are quite a few of them still involved with the business. Jack Ma in the background there. I've made videos before. He's made a couple of memos. Jack Ma's done a couple of memos in the background supporting the company, motivating the companies. And here he's talking about reinvigorating with new blood, younger talent, but also those co-founders who are still there and still really in charge.
And he had been involved in developing the major platforms like Taobao, Alipay, as well as all the monetization technology for those platforms. So he's very well equipped to be the CEO of the company. And having that in place, the next thing we said is we want to have focus. And if you look at Alibaba today, what we have communicated internally to our employees is that we're in two businesses, e-commerce and cloud computing. And then there are a lot of businesses that could support, that are strategic to us.
When he says they're in two businesses, e-commerce and cloud computing, he says he means two main businesses, the biggest businesses there. And yesterday, in the video I made yesterday, he talked about cloud and in relation to AI. And they've got AI going on, and that feeds into their cloud. It should grow their cloud, or that's what they're planning. That's what they're hoping. So AI can drive cloud to double-digit growth, like US businesses, but they do have a number of other businesses that do other things, but they're just smaller, and he's going to talk about this now, I think.
So to give you an example, we're in the meals delivery business through a platform called Alibaba.
Well, yes.
Yep. So do we have to be delivering meals? Is that our core business? Probably not. However, Alibaba is totally important to us because the on-demand delivery infrastructure that it has established, not just to deliver meals, but also other fresh perishable items like medicine, like flowers, fruits, that instant delivery infrastructure is completely strategic to us. And that's why it's an important part of our business. So we went through a process of understanding what is core, what is strategic, and what are some of the non-core stuff or financial investments that we can exit over time.
It sounds like they will be selling more over time of these non-core businesses that really they don't want or don't need. But I can understand how that delivery business is of strategic importance there, especially in the competitive landscape. There are other businesses that do that, and they could use that over time, that infrastructure, so it could be useful. I can understand that, but there probably are other smaller businesses that they're going to get rid of. So we can expect that. I think investors can expect more selling down of those businesses and just focusing on these ones, especially cloud and AI, as he said in that video I made yesterday.
Let's pivot a little bit and talk about the challenges that Alibaba is facing, right? Geopolitics clearly is getting more complicated. China's economy is still slowing. That's also the regulatory scrutiny. And of course, the competition in e-commerce is ever intensifying. How do you think about these issues and challenges?
That's a great question. You have mentioned regulatory scrutiny, you have mentioned competition, geopolitics, Chinese economy. But think about it. Every Chinese technology company faces exactly the same issue, right? All those factors. The unfortunate thing is, in the last 3 or 4 years, those factors, those sort of negative factors have become the narrative for Alibaba. And it shouldn't be. Alibaba is about growth. We're about technology innovation. We're about applying our technology into our core business to create value for our customers and eventually also for our shareholders.
Well, it's interesting. He says those things. He's right, of course. There are other companies out there. All of the companies, the tech companies, are facing the same issues. Of course, Alibaba is older. These younger companies, tech companies that are competitive, that are rising, where Alibaba's been around for a lot longer, really the first mover. Their growth has gone down, where there's some other companies, whether it's PDD, JD, who are more thought of as on the rise, even though they do face these issues as well.
So for us, it is what it is. Geopolitics or regulatory, whatever it is. We think we're now entering a phase where we're in a stable regulatory environment, in the sense that regulation is quite predictable. We know what are the red lines, what we can do and cannot do. Competition is always, since day one, we've had competition. So you can't
bigger,
cut costs and cut
intense.
your way into competition. You have to have a growth mindset when you compete. And that's where we are. That's what we've decided to do. We've decided to very much focus on our core, e-commerce, cloud computing, and our goal over the next 10 years is to be able to get back to growth, get back to double-digit growth. We have said we're sort of from a planning standpoint, on a 3-year time horizon by our fiscal year 2027, March end 2027, we like to be growing double digits.
Well, that's interesting. That's the first time I've heard him say that, putting a time frame on it, 2027, double-digit percentage growth there, and that has been lacking in the overall business. There have been parts of it, and I've done videos about this, the earnings. If you want to go and see those, I'll put a link to that in the description. The past few earnings I have covered, and the growth has been pretty low in the cloud sector and in the giant China e-commerce. International's been growing very well, and logistics also growing well. So there are parts of the business, but they're smaller, and they're catching up. If these main units don't start growing at double digits, the other ones are going to catch up, which is not necessarily a bad thing, because they'll have a lot of quite big businesses. But if they manage to reignite growth in these core businesses, which they're definitely aiming to do, again with AI driving the cloud, with so much compute needed to drive AI. We're seeing that. We're seeing Nvidia just going incredibly well because they're selling the hardware, and these mega businesses in the US buying the hardware to try and drive growth, but spending a lot on it. So Alibaba's got all these elements together, and they want to get to this double-digit percentage growth by 2027. He's put a time on it there.
Great. I think we are holding our breath. There are many investors or shareholders of Alibaba in the room, and I'm sure they are delighted to hear that.
Now, if you're getting value out of this Alibaba episode so far, I'd really appreciate it if you remember to smash that like button to help the algorithm to spread it to more people. It really does help. And if you're new here, do consider subscribing to get more of this kind of content in the future.
You alluded to it, but there are probably many shareholders of Alibaba in the room and potential shareholders of Alibaba in the room. What can they expect of the company in the next 1, 3, 5 years?
I think the first thing our shareholders should expect is that management has extreme focus. We're extremely focused on our core businesses and how to create value and how to serve our customers, right? To give you an example, strategically, we have decided in our e-commerce business that we always put users first. Alibaba has always struggled in terms of trying to define who our customers are. Is it the merchant that are selling, or are they the users that are actually purchasing your products? We have decidedly gone into users first. That's because they're actually eventually spending the money to benefit our merchants.
Right.
They're actually, converting it, to use a internet tech, sort of our internal language, converting into purchases that will create business volume for us, right? So users first.
That's interesting. He says that that's very reminiscent of Amazon. I said this yesterday in the video, where a lot of things do sound like Amazon or following that playbook. And this is something that Amazon had all the way along. Jeff Bezos, of course, always day one and pleasing the customer. The customer comes first in terms of, giving value back to the customer, as much value as possible. You think about Amazon Prime, I mean, that's how Amazon grew so big, is to put the customer first. And, for him to say that they were in two minds about that all the way along, but now they're putting the customer first. So maybe not too little, too late, but perhaps they, do you think that they should have done this earlier on? What do you think about that? Let me know in the comments whether you think they should have had this customer focus first.
So having that extreme focus and having a very clear strategic direction of what's important and what's not, that's what our shareholders should expect from management. And we're not going to spend time on unimportant things. I mean, there are a lot of businesses within our portfolio right now that, to be honest, are not that important. So that's not going to occupy a ton of mind share. The only mind share that we will apply to that is we'll figure out ways to exit those businesses.
Okay, so he said that again. He repeated that there are businesses that they have there that are unimportant, that may be selling down or not focusing on at the least, but probably selling on and focusing on these core things, or e-commerce, customer first, and also, as I said in the video yesterday, cloud, growing the cloud because it's growing so slowly. When the US cloud businesses are growing so fast, they need to get back to growth here, and AI can help that. In yesterday's video, he outlined the 3 ways that they're involved in AI, and growing that in the cloud business is central to that, core to that. Then he talked about e-commerce and the customer first and really focusing on that. So it will be interesting to see if they deliver on this in the coming quarters, in the coming years. He's put a timeline on it too, 3 years. So they've got really 3 years to get this going, to get the growth going. So what do you think? Do you think that they'll be able to do this? Let me know in the comments what you think. Do you think they'll be able to reinvigorate with this double-digit percentage growth? The video I made yesterday, some people have been skeptical in the comments about that, about whether they can actually do that, and of course the share price is way down. Now I do talk more about Alibaba on the Art of Value Patreon, along with other aspects of investing, other companies as well. I'll put a link in the description if you're interested in checking that out, and maybe see you over there.
We've said in the last quarter we've sold down non-core financial assets, and we declared a special dividend from the proceeds of those sales. I think people should expect that that's an ongoing project, and we have established special teams to manage that, because we don't want that to distract our operating management team.
It sounds like there might be more dividends on the way as they sell down these non-core assets. A bit of a sweetener for investors. I mean, as an investor in different companies, I would rather not see dividends. For Berkshire Hathaway is famous for not having a dividend because they take the money, they reinvest it for growth. So here that they're definitely doing buybacks. Does it imply that they don't have anywhere to put money? They certainly have enough cash, but you get the feeling that they're sort of sweetening the pot for people and for funds to invest in. I mean, this is a JP Morgan conference here that they're talking to institutional investors. Now, I do need you to know that I'm not a financial advisor, and nothing in this content is financial advice. This is just for general education and entertainment purposes. You need to do your own work, your own analysis, or seek professional financial advice before deciding on any investment product or service. Now, if you're watching this video on YouTube, I'm going to put the video here of yesterday's part 1 of this interview with Tsai, where he talked about AI and the cloud business. And here I'm going to put another recent video that I made about Alibaba. If you're interested in that, go and see either of those now if you want to. I'll put links in the description as well for those watching or listening elsewhere. And thanks to everybody for watching or listening to this one, and I'll see you in the next one.